that the world of investing in public or private equities is going to be very quiet, at least through the end of the year. We have an election, we have redemptions in the public equity markets, nothing's going to happen near term. However, once we roll into next year, some of those folks are sitting on massive piles of cash, whether private equity or hedge funds or mutual funds, and investors don't put money in funds like that to be kept in cash. That we can all do ourselves. There is pressure to put the money back to work. Won't happen before the January earnings season, but I think at that point, if we get a sense that expectations have been set low enough to reflect the current nasty economic realities, I think at that point money has to come back into the market. And I think it does it in the public market, and I think it does it begins to do it for IPOs, perhaps as early as the end of the first quarter, maybe the second quarter. And I think it begins to happen for private equity too. At some point, we're all going to sit up and say, I've got cash, I've got to put it to work, and there's a great deal that's on sale right now.
And for private companies, I mean, you hear about the VCs telling them to batten down the hatches, cut everything like that it's sort of like this, the good times are over. But when do you think we'll see private companies be able to go out and raise money again? And when are VCs or other going to be willing to invest it?
I think we see very clearly right now which companies have the strong enough management to get through this period. And the information the VCs are giving the private companies batten down the hatches is exactly right. Let's see who can get cash flow positive or close to cash flow positive right now without further relief support. I think when we come out of this, again, let's look 6 months ahead, you'll see a lot of companies that are a lot stronger and a lot more lean than they had been going in. And I think at that point, investors are much happier to belly up to the bar and help them get to the next year.
And last thing, how about the IPO market? Do you think next year it's still going to be M&A, that it's going to be a while before the IPO window opens again?
No, I think the IPO market will definitely open next year, and there's a couple of reasons for that. One is the same issue that we had before, which is you've got money on the sidelines, and in the beginning, it buys a lot of traditional, wonderful, seasoned, proven companies that are on sale, if you will, at the moment. But remember that public equity investors are paid for relative performance. And so once we get through the period and you wake up and discover that everybody owns General Electric and P&G and Google and Apple, pick whatever names you want, they have to find a way to outperform each other. And that means they have to take on some incremental risk to get the incremental performance. And some of the companies that are currently in the IPO pipeline are a couple of $100 million in revenue, cash flow positive, 30%, 40% operating margins, really strong contenders. And those guys, I think, open the window as we roll into the first half of next year.
And then what about sectors? IT, green tech, biotech, anything that's going to be stronger than one of the others?
I'm not going to call it by sector. I'm going to call it by company. I think people are going to look very closely at the financials, at the P&L and the balance sheet, and see who has the wherewithal to A, weather a storm, and B, to shoot out of this thing at an accelerated rate.
Okay, Liz, thanks so much.
Thanks.